Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at NextEra Energy out of the utility sector. It is April 26th. A lot of red in the market the last couple of days. I like to see that, and I like to see if we can find value whenever that happens. So let's take a look at this one, NextEra Energy. Let's jump right in. Now this is my investing criteria. I've added this recently to show you what exactly I look for if I'm adding a new position. I want it to meet 4 of the 7 criteria. If it is not a financial company, so disclude this last one for price to book. If it is not a financial company, if it is a financial company, that'd be a bank, an investment bank like TD America, or a regular bank like Bank of America or JP Morgan. And then I add in the price to book, and then it would need to meet 5 of the 8 for me to do more of a deep dive, for me to even take it as one to consider for future investment. So go ahead and pause this, read this at your leisure. Now back to NextEra Energy. If you want to know more about them, check them out, www.nexteraenergy.com. That is their homepage where I pulled this information from. And again, they are a utility company out of the utility sector, right? And they provide all things you would think from a utility company, power, but they also have their hand in natural gas drilling. They are also in the renewable energy sector, windmills, wind, solar, small scale, solar universal, battery energy solar, right? Transmission, obviously transmission lines and that sort of thing, as well as nuclear. And then you can see their pipelines as well. So they are transmitting natural gas, right? And then I'm not sure what other means, if that's their headquarters or businesses they own, or what that is, but there are several others too. So not exactly sure what that is, but you can see that they are basically all around the United States, in almost every state. I don't see them out here in a couple. I'm not sure why this one's grayed out. Maybe they don't have a presence there at all. And they do have a small footprint, looks like up in Canada, a couple spots up here out in Hawaii. So like I said, all 50 states plus a little bit outside the country in Canada, it looks like. Now, they've been around since 1925. They started out as Florida Power and Light Company. It looks like they had their hand in ice cream as well, ice companies, laundry services, and even ice cream businesses. So they were pretty diversified from the get-go, but then leaned into the utility portion of the business. Obviously, they've grown pretty much. You can see them right here down in the Florida area, but all across the South. Big presence in Canada and the Northeast as well. So pockets really heavily, but they started out down here, and that's pretty much their bread and butter. So again, check them out, nexteraenergy.com. That is their homepage. And the reason we are taking a look at them, NextEra Energy, ticker NEE, out of the utility sector, down 4.82% on the day. And I know I repeat myself in these videos often, but anytime I see a company down 4, 5, 6%, I'm going to take a look to see if it is presenting any value, especially whenever the market does rebound a little bit like it has recently. Although the last 2 days, like I said, there has been a lot more red in the market. So it is nice to see, at least for me. I don't mind sales. I don't run away from the market or a grocery store or any other store that I want to buy something in just because they're having a sale, which is what it is a lot of times. Whenever these discounts, in my opinion, discounts start to happen, we start to see red. That's when you should be interested in buying. I know a lot of people want to buy when it's green and it's going up, but a lot of times you've already missed a lot of returns, right? So back to the stock review here. 52-week range as low as $67.22, as high as $91.35, and it did close out the day today at $74.07. So they are closer to that 52-week low. Their average volume is 8.6 million. Today's was 10.8, so a little bit of a sell-off here in the morning, and then it leveled out a little bit down in the afternoon as well. Looks like they are rebounding a bit in the after hours here. Market cap of $149.872 billion, so they are a large cap company here. A beta of 0.47, so this one is very low volatility on this one, less than half the volatility of the market. So if you're looking for a utility company with low volatility, this one would fit the bill. PE ratio is high. I will say 35.27. Unless they are growing extremely fast, that is an extremely high PE ratio. I know there is some growth with this company, but I don't know that it justifies. Utility companies usually are not growing that fast to justify a PE ratio in the 30s, right? So that is a bit concerning. Earnings per share, EPS, is sitting at $2.10. That's decent. Next earnings date is somewhere between July 20th to July 24th. Forward dividend is $1.87. They are quarterly payers, so divide that by 4, but we'll see that here in a little bit. They do have a nice dividend yield of 2.37%, which beats the overall market, the S&P 500 that is. Ex-dividend date, February 27th was the last one. They paid out March 15th, so if you did buy them now, you would be in line for their next dividend payout. And a one-year target estimate, at least according to Yahoo Finance, is $95.49. I am not affiliated with Yahoo Finance, just one of the sources I'd like to go to. I always tell you, get into the details of the business. You want to go into the statistics. You want to go into the financials. Look at what all they have been doing. Are they paying down their debt? Are they increasing their debt load? Do they have more assets than liabilities? Their free cash flow. One of the things I like to look at to give me a quick gauge of whether or not the company is potentially undervalued is dividend yield theory. You'll find that under statistics. Down at the bottom, you'll see dividends and splits. You're going to want to look at the 5-year average dividend yield. That says it's 2.12. You want to compare that to the current, or what they're calling here, the forward dividend yield. That's just the current dividend yield, 2.37%. So if it is higher, like it is here, right, 2.12 is the 5-year average. It's currently at 2.37. This speaks to some potential undervaluation here. If this is higher, if this number was lower than the 5-year average, that would speak to some potential overvaluation. So they are inversely correlated, right? So this one would be potentially undervalued based on dividend yield theory, though not a ton, right? Just a little bit. And this is another one. If you go into financials, again, you'll find a lot of information there, their income, their balance sheet, their free cash flow. And what I look for, again, is free cash flow. That's what dividends are paid out of. This one is looking a little concerning, right? Negative 2.9, 224 million, 277 million, 1.4, negative 1.4 billion again. So big drop from 2021 to 2022. Not sure what it will be this year, but that is a bit concerning. Though utility companies are funding, they are cash intensive. They are able to do a lot of things if they're putting the money back in investing into new lines, like renewables. If they have a big investment in renewable solar field or a windmill generators or something like that, then they can do some funky stuff and make their free cash flow look far worse than it is. So this one for utilities is not one that I really judge heavily on free cash flow, but it is a bit concerning that it's in the negative because, again, that is what your dividend is paid out of, and you want to make sure there is enough free cash flow to cover the dividend with room to spare. In my opinion, I like anything 75% payout or less. We're going to see that. Actually, you can see it here, payout ratio 80.95. That's higher than I like, but utility companies compared to the sector, really, they are typically all above 70, 80, even sometimes 90%, right? They are paying out a significant amount to their shareholders because they don't offer a lot of growth. Another little bonus here, repurchase of capital stock. Looked like they repurchased some back in 2020, but it's been pretty flat since then. So you'd want to check to make sure they're not issuing any new stock and diluting you as a shareholder. Now, I always recommend more than one source for information. So another one that I like is stockanalysis.com. And here you have 11 stock analysts that have taken a look at this. They call it a consensus buy. They like this one right now, at least these 11 analysts do. They have a low estimate of $80, which it currently sits quite a bit lower than that, almost $6 lower than their lowest estimate. So if it came back up to their lowest estimate, that would be a 8.01% increase in the stock price. If it happened to hit their average of $93.64, that would be a 26.43% increase in the stock price. And if it hit their high of $110, that would be a 48.52% increase in the stock price. And if you bought them now, all the while, you'd be collecting that 2+% dividend yield. Now, I am not affiliated with stockanalysis.com, but I do recommend, like I said, looking at more than one site, at least 2, if not 3 sites, to make sure that the information that you are receiving is accurate, and it gives you a lot of the same information that we can get from Yahoo Finance, just in a little different format. You can look at the financials, again, statistics, their forecast, which is what we're looking at here, their dividends, and in statistics, I go down to financial efficiency. I want to look at the return on equity and the return on invested capital. Now, I like 10% or above as just a guideline, but I also compare them to the average of their industry, right? So for this one, you'd want to compare them to other utility companies that not only provide electrical power, but also provide natural gas power, as well as maybe have their footprint in renewable energies. And a lot of these utility and energy companies now are going into renewables, and this one has its hand in trying to get what they call carbon neutral. That's going to be the big buzzword over the next several years, carbon neutral. So there will be a big growth in renewable energy and carbon capture so that people can try to get carbon neutral, right? That's the idea. So return on equity for this one, 11%. That meets my criteria, but the return on invested capital is a little low, 2.9%. But again, very capital intensive businesses to keep up the transmission lines, to keep up the business itself, right? Now, this is where I would typically show you my position. I do not currently have a position in NextEra Energy. It is on my watch list. I would love it to drop back down. I think utilities overall are typically a rush to safety for people. As you hear people say, they're rotating in the market. A lot of people rotate into utilities whenever things get bad because for the most part, people are going to pay their utility bills before they'll cut off other discretionary spending. Like you're not going to go buy a new pair of sneakers or a new car or a new sofa or a new washer and dryer if you don't have to, but you probably will pay your electric and gas bill so that you can keep the lights on and keep your AC running or your heater running if it's the winter, right? So they have an 81% payout. We saw that already, so that's a little higher than I like, but for utility companies, I really do not think that's outlandish. Nice dividend growth of 10.28%. And they do pay out 46 cents and some change. There's some fractions of a penny in dividends per share right there. So that will give you your payout. If you owned a share of NextEra Energy, you'd get basically 46 cents. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join me on this journey to financial freedom. Join the vested interest community, trying to build out a community of like-minded dividend growth investors so that we can share our experiences, share stock tips, even share what we're buying and selling on a weekly basis or what we should avoid over time. I am not the smartest guy in the room. You all have a lot to offer out there. So drop a comment down below. Let me know what you think of the video. Let me know what you think of NextEra Energy. I do personally read and respond to the comments. I'm always interested in your questions, opinions, or suggestions for future topics. So if you have some stocks you'd like me to cover, drop those in the comments down below. I'll try to work them into a stock pick of the day video in the future whenever they have a pullback and see if they are worth adding to the watch list or worth picking up now. NextEra Energy is on my watch list. I'm looking for it down in the 60s. Would love for it to set a new 52-week low and really trying to hold out for the next rotation as we rotate back into more growth stocks. People will pull out of the utilities. That's typically the time you want to do it. So that is what I'm waiting for on this one. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one, and thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.